Hi, students. This week we're going to talk about blockchain, the sector. So there are many sectors in blockchain. That's my definition of sectors, and it's in the book also. So blockchain, the sectors. What sectors we have in the blockchain technology? We have the Bitcoin, definitely, one of the key sectors. Smart contract by Nick Szabo. Now, Nick Szabo, big story, we're going to talk about it. DApp, decentralized application, Web3 technology, DApp technology, smart contract technology, Bitcoin technology, NFT. We hear a lot about it recently. And then we're going to go to talk about DeFi and CeFi and ICO. ICO is initial crypto offering, which is what we have it in the stock market or equity. We call it IPO, initial public offering. So we're going to start with Bitcoin. And here is a story about Bitcoin. It's in the book in more detail, but I'm going to share it here. On a Friday, 31st, October 2008, Satoshi Nakamoto. Now, sounds like a Japanese name, but a lot of people think it's a Nick Szabo. And I did my investigation from the letters I see for Nick Szabo and the paper by Satoshi that we're going to learn it next week, probably. They're the same. So I think Nick Szabo is not Satoshi Nakamoto and nothing to do with Japan. So for Friday, 31st, October 2008, Satoshi Nakamoto wrote, considered to be the founder of the Bitcoin, send an email from Satoshi, subject, Bitcoin P2P eCash paper. Bitcoin P2P, like peer-to-peer, eCash, electronic cash paper. The news group, here's the email, here's the date for the email, and here is the key revolutionary, the change word called, I've been working in a new electronic cash system that's fully peer-to-peer with no trusted third party. So what is a trusted third party? When you have a Visa card or MasterCard or PayPal, you go to buy goods and services. When you give the plastic card to the store, suppose you go to Costco, you buy your liquor, your meat, your stuff you like, you're happy with the stuff that you buy, you check out. When you give them the credit card, that called the trusted third party. So basically, for Costco, in theory, Visa bought the stuff. For you, in theory, you bought from Visa. So Visa, it's in between the buyer and the seller. There is a Visa or MasterCard, but Costco use Visa. So this is what's called trusted third party. So he said here, I've been working in a new electronic cash system that's fully peer-to-peer with no trusted third party. So you can have a cash system, me and Costco can do a transaction without having a third party Visa between us. So, and this is what happened to be Bitcoin. Bitcoin is a digital currency. That's it. It's a digital currency. It's a blockchain. If you two entities in the blockchain, they can do a transaction. Like, for example, if Costco is in the Bitcoin blockchain, which can happen at any second. If Costco said, you know what? Yes, I'm going to be working with Bitcoin. Then you can go to Costco and send them, like suppose your bill was 20,000, then you send them one Bitcoin. And that's it. You're done. There is no Visa. There is nothing. So all what you have to do, when you go to the cashier, go to the blockchain for Bitcoin, boom, send a coin, and that will be the bill. So the system for Bitcoin has a private and public keys. There's a mathematical algorithm that give you a hash from these two keys, give you a hash, and there's a transaction. It's like your private key is like ATM pin. The purpose of Bitcoin is to present lower transaction fees than traditional online payment system. So how Bitcoin works? It's work based on cryptographic methods to secure fund transfer. Bitcoin transaction are verified by a miner. We talked about that. And as of now, we have about 13,768 full nodes as of November 2021 when I was doing the book. Why Bitcoin is the first cryptocurrency to emerge after many failed? Now you have to know, guys, that Nick Szabo, he was working in this kind of stuff from 1984 or 83. But when we talk about the history of crypto, now we're talking about the technology, blockchain. But we're gonna go to crypto, so we're gonna talk about previous crypto attempts that failed. And the problem was double spending. Why all the crypto experiments before failed? Because double spending. What does that mean, double spending? And that's important. Double spending, suppose I'm a buyer and you are a seller. I bought something from you, I give you some coins. Good, we're done. The problem was that I have, for example, 5 coins. I give you 5, the balance is 5, so my balance should be 0. I have 5, I bought goods and services for 5, my balance should be 0. But the other people don't know that I already did the transaction. I can do another transaction up to 5, another transaction with many people at the same time. I can do transaction for 5 because you see my balance is 5. The problem is double spending. So I can do double spending, buy 5, buy 3, buy 2, buy 1, and nobody knows, like, I already exhausted all my coins. So the problem was on all the coin eCash before is the double spending. I was able to double spend and the system cannot cover that. So Bitcoin basically is the first crypto that solved the problem of double spending. Therefore, Bitcoin comes to with a historical public ledger facilitated through a blockchain that provides empirical verification of a property rights and transfer. So when I do the 5, when I do a transaction, during this time, I cannot do any other transaction. This transaction will go between the buyer and the seller, between 2 parties. And when that transaction comes, it comes to the block, and everybody can see the block that Joseph sold, bought or transfer 5 coins to X, sent 5 coins to Y, so it become to be a public, so there is a transparency. That's the problem, was double spending, and Satoshi solved this problem. So key Bitcoin historical excuse me, stops. In August 18, 2008, Bitcoin organization is registered. October 31st, 2008, Satoshi Nakamoto make an announcement. January 3rd, 2009, the first Bitcoin block is mined. Block was 0, no transaction. January 8th, 2009, the first announcement to the crypto Rafi mailing list about the first version of Bitcoin software. January 9th, 2009, block 1 is mined. And the story about the first Bitcoin transaction is very great story. So, so he said, I think his name is Laszlo, who was in blockchain. So he said, cryptography mailing list. He was in the mailing list. So he said, I will pay 10,000 Bitcoin for a couple of pizza, like maybe 2 large ones, so I have some left over for the next day. I like having leftover pizza to nibble on later. You can make the pizza yourself and bring it to my house in order for me to, so blah, blah, blah. His name is Laszlo. And if you click here, I took the story from, but the page is no longer available. That's a source where I took the story. So on May 21st, 2008, so nobody wants to buy me pizza. Is there Bitcoin amount I'm offering too low? Like, is the Bitcoin amount I'm offering is too low? I just want to report that I successfully traded 10,000 Bitcoin for pizza. Pictures, you can see the pictures here. I'm not sure if this, when I drew the book, it was active, this link. So the medium of exchange was 10,000 Bitcoin for 2 pies of pizza. In May 22nd, 2010, it was worth $41 for 2 pizza pies back then. In November 8, when I was doing the book, Bitcoin was 65,466. Multiply by 10,000 coin, that would be a $65 million for 2 pizza. This is a picture that Leslie had. This is 2 pies that he bought. This is his kid. And this is the guy who sold the pizza. In May 22nd, Jeremiah, his name Jeremiah Devant, traded 2 large pizza for 10,000 Bitcoin from Laszlo. A transaction that would come to inspire the annual Bitcoin pizza party celebration. So that's the story. I don't know about this guy, what he did with the crypto. Maybe he lost the digital wallet. I don't know what happened with this person. But obviously, he did the best transaction in our modern life. The number for Bitcoin, we're going to hit the 21 million by 2140. But then we're talking about 100 years, 120 years from now, or 118 if you want to be accurate. So in 100 years, we're not going to have more than Bitcoin is going to be 21 million. But notice this is a concave shape, not convex. That means the supply of coin decreases by the time, and that we call it halves. Bitcoin key technical feature, and that's the blockchain for crypto. Sorry, for Bitcoin. The cryptographic hash function, time stamped. I will show you in the next slide. SHA-256, that means your key, private key, this blockchain key, they hashed through this function called SHA-256. It gives you a transaction number. Signature algorithm, it's called EDC-CSA. If you do a computer science, you will know what is that. The address is SHA-256 and REPMID 160. The consensus mechanism, proof of work, asymmetric cryptographic, and native currency and network of nodes. That's a blockchain of Bitcoin. In your final project, if you use a different coin, you need to report those information. This is a timestamp append only log. So basically, you see a block header, the hash, the timestamp, the nonce, market, and then you can see the first. That's the first transaction list, and that's the first block. The first block going back here, and then another block, and that will go back here, and that will give you another block. And all of this together would be a ledger. Here's a real-time monitoring Bitcoin transaction. If you want to see what happened with the crypto, we started with Bitcoin. So you can see everything you want to know. Here is transaction. Here's every transaction you want to see. The website called blockchain.com. Crypto wallet. It's a nice website. Check it out. So you can see blockchain for Bitcoin. So if you click here, for example, it's slow. You can see all the transactions that you have at this time. So here's 108,835, 1,994, 785. So you see the hash here. If you click that, you can get more information. So all what you want to know, it's already here in the blockchain.com. Check out this website. This is how the SHA function work. If you do computer science, so this is how it works. Private key with the public key through SHA. You get an address here, and then this address will be verified. And if you want to be a miner, you need to know these numbers to get that verified. So that's complicated, not our business, but at least you understand there's a private key, public key hash. With the SHA function, we get it and verify the transaction. Here is first Bitcoin entire block. That's block number 1 in Bitcoin. So you can see what happened in the hash capacity. So there is nothing, all zeros. There's no transaction. but there's a minor unknown, and on to the next block. The first Bitcoin block, top part. So this is not clear. So I did that snapshot, the first block, top part. Now we're going to go to smart contract. You hear a lot about smart contract done by Nick Szabo. Again, a lot of people think he's Satoshi. And he offered it in 1994. He created a Bitcoin, a crypto called Bit Gold, 1998. But the problem is double spending. He could not solve the problem for double spending. Smart contract is a pre-programmed terms and condition, and it is immutable and transparent with terms that are final on issuance and uses unstoppable code. That's a smart contract. I want to talk about Nick Szabo. Nick Szabo founded as a virtual currency Bit Gold in 1998. Some suggested he's Satoshi himself. Szabo proposed the execution of contract for synthetic asset, and Szabo research would mean that functionally of electronic transaction method could be encompassed by the digital real realm. I think he served in the US CIA or in the US Army. So he arguably, I looked to his other work and I compared it with the Satoshi paper, which we're going to have a class talk and go through the paper. And I feel this is the same language that he mentioned here and there. So it seems to me this is the same person, but we didn't know who's Satoshi. The DApp, which is abbreviation, stands for decentralized application. It's a new mechanism for creating, operating, and financing software service without a central authority. Now, Visa is a central authority. Buyer, seller, the meet in Costco, for example, the user credit card. When you put the card in the machine, then centralized system, this machine will send something to the centralized system in Visa, and then that verify, and then we call it a trust. And then Visa say, trust me, this person is good. So he can take the goods. And if he doesn't, or she doesn't, or he doesn't pay you, Visa will be responsible for the transaction. DApp is frequently built on the Ethereum platform. By the way, one of the founder of Ether is from Colorado, Fort Collins. I tried to bring him to CU Denver, but was not exciting from both sides. DApp, here's what matters for us. DApp for cryptocurrency person, the DApp operates on a blockchain network in an open source, public with decentralized setting. Now, if you want to take the codes for a Bitcoin, it's available. Actually, Dogecoin, the founder of Dogecoin, he took exactly copy-paste the Bitcoin open source code, and he did that, and he called it Dogecoin. And then now he changes a lot since then. But the first story with Dogecoin was exactly, he copied the open source from Bitcoin. And nobody heard about it till Elon Musk make a tweet about it, and that was from there went up. Now I'm going to talk about Web 1, Web 2, Web 3. Now, I am much older, I believe, than you, a lot. But the internet, the first time I recall the internet was like my city, they have a website. You get some pictures. It's a static website. And it was in the late 90s. Windows was back then 2 or 3 or 4, something like that. Now we are 10 and 11 Windows. So we call this Web 1. Why? Because it's a static. So for example, maximum you can click and send an email, maximum in that website. So you cannot interact with the founder, and that was a Netscape navigator back then. Then the technology improved, and we have a Web 2, which is more you can interact. For example, application for university, you can apply online. Back then, you need to go to the library, Barnes and Nobles. I'm not sure if it's still available. You say, well, I'm on application for University of Colorado. Or you go to bookstore at University of Colorado, you get an envelope, and you start filing in your name, statement, purpose, and this, what you want to study. Now you do it online, everything. So that's a Web 2 technology, online. So this Web 2 Like, for example, Amazon, Uber, Netflix, all of these are Web 2. All this app you have in your smartphone are Web 2 technology. That means there is a centralized, like if you are on Facebook or Meta as a company, Facebook or Instagram or TikTok. So there's a system, Facebook, there's a system there. When you post, it goes to the system distribute that to your network. So that's a Web 2, and you can interact with this. Web 3 is different. Web 3, you take the centralized out and become to be peer-to-peer. So that means if you want to say hello to your friend, you didn't need to go to Facebook and make a comment, hey, how are you today? You can do a peer-to-peer Web 3 decentralized. So what you need is a blockchain. That's a recent technology, and Gitcoin. And we're going to talk with the founder of Gitcoin. He's mastering this, and he invested in a lot of millions. Last round of investment was $60 million in the Web3 technology. He's a coder. He writes codes. He's a cool person. You will see him in the video. And all of his life is dedicated to Web3, how we can make Web3 available to everybody. So basically, static to centralized, now decentralized, peer-to-peer Web3. So here's a picture, Cisco 84, Amazon 95, HTTP, and then SSL TLS with PayPal, and then 2008, 9 and on is undefined, which is Web3. Web3 key feature is decentralized, trustless, and permissionless. Remember, we talked last class about permissioned and non-permissioned or permissionless. It works in artificial intelligence and uniquely and connectively. Now we're going to go to NFT. NFT stands for non-fungible token, and NFT is a digital asset on the blockchain network. Most of the tokens are in Ethereum blockchain. Again, blockchain with a lot of network, a lot of people there. So if you want to do a token, you can go to Ethereum, write a few codes, and I can help you with that. I do consulting jobs for that, and I can issue for you a token. You can call the token. We're going to talk about it when we talk about the cryptocurrency products. So we have a coin and we have a token, but we're going to talk about this later. So NFT is another type of token. We call it non-fungible token, and built in the top of existing blockchain. So you didn't need somebody to write for you a blockchain and invite all the network to come to your blockchain. It's going to be a lot of marketing cost and a lot of cost programming. You can go to already existing blockchain, like Ethereum has a blockchain, very highly networked, a lot of network in there. And you can issue your token. You can call this a Bonaparte token. You can call this the Smith, the Obama, the Trump token. And you can put in a picture, you can do anything with it. And that will cost you couple $1,000, that's it, and you can have your own token. NFT is a non-fungible token. It's a different type of token. NFT has a unique identification code, and what matters most common form of these products are digital art. So I have some pictures here, and powered mostly by Ethereum. I think blockchain doesn't have token. The Bitcoin doesn't have it's the biggest blockchain. It's Bitcoin, but they don't have token. It says like there's a website here. I hope the link's still working about NFT. Why you should care about NFT? Many reasons. With digital property become so popular, so NFT become to be as a great interest. Now with NFT, the funding required for purchases can be tokenized, meaning that an NFT for a fraction of this house can be purchased. So it's more digital asset that you can carry that in your digital wallet. Now we're going to talk about ICO. Initial public offering is for companies, IPO we call it. We know Robinhood was recently, but because we have a bear market now, we didn't have a lot of IPOs, if we have any. For crypto, we say ICO, initial coin offering, and sorry, just like IPO, initial public offering for crypto for equity company. Cryptocurrencies also have their ICO. ICO are not nearly as extravagant of a deal as IPO. IPO, I have to explain that. You need a company to, they call it underwriter. JP Morgan, Morgan Stanley. I think BlackRock also does it. Goldman Sachs does it. So you need a bank or big financial institution to support the company. Say, okay, I'm going to go on that day in the market through the supply 1 million share, and the underwriter has to make sure that somebody will buy this share for this price. So there's a negotiation between the underwriter and the owner of the company. I'm talking about IPO. Suppose when Robinhood went to the IPO, for example, so Robinhood negotiated that with Morgan Stanley. I think they sure was Morgan Stanley, and they maybe not, maybe I'm wrong, forgot. I think Uber was with Morgan Stanley. Anyway, one of these banks, and they said, we're gonna say the company worth, suppose $100 billion, suppose 100 billion, and then we're gonna say, okay, we're gonna give 50% of the shares. That means the 50 billion. And then Morgan Stanley has to go to the market and do all the paperwork to show that this company worth 100 billion, and they say here's a 50, and they make sure that a lot of people buy this share. That's a lot of work has to be done, and then SEC has to be involved. There are 3 types of ICO: static supply and static price, static supply and dynamic price, dynamic supply and static price. So that means in ICOs, we say we're gonna give you X amount of coins for this kind of price, and that's it. But that would be a static supply with a static price. Static supply with a dynamic price, you're gonna say, listen, we're gonna give you these coins fixed for this price, but it will be traded in the exchange. Like FTX is one of the exchange, but you can be many exchange to trade crypto, and there are many. But the price can move up and down. And then the dynamic supply and static price. Dynamic supply, that means I'm going to give you 50 coin, for example, now for this price, but every X time, we're going to give you more coin, because the blockchain for this coin keep giving you coin, because somebody has to verify the transaction and giving you coin to the miners or forgers or whoever does the proof of verify the transaction. The pros and cons about ICO. Obviously, the pros is IPO is very costly, a lot of fees, and a lot of profit driven going to the underwriter. The banks getting a lot of money for that. The cons, the ICO cons is highly volatile, and that has again to go to regulation. The whole crypto business, all of this crypto that everybody hear about it, talk about it, it's by retail investors who are 20% money-wise from the market. 80% are institutional investors. Without regulation, most of the money will be not allowed to go to this crypto market. That's the reason people buying coins now and waiting. When the regulation comes, then institutional will be allowed to go and buy these coins and put that in their portfolio. Because the supply, because only the focus on the retail as of now. So these coins are very volatile. Maybe you buy in the ICO, you buy X amount of coin, but this price can go down 30% or 40%, so you have a big loss. So, or it can go up 2,000% also. So it's very volatile. And that because there is no regulation. And here is a structure for the ICOs. ICO by geography, most of the ICOs are in the United States. The ICO have occurred in more than 25 different industries, and the most popular blockchain to host the tokens of this ICO, the Ethereum. Now we're going to talk about final thoughts, DeFi versus CeFi. CeFi is centralized finance, Visa card, MasterCard, all the above. DeFi is a decentralized finance, which is a peer-to-peer built on a proof, but the system here built on trust. The CeFi is built on trust. When you go to Costco and you make your transaction, Visa tell Costco, trust me, this person can deliver the money. Don't worry about it. If he doesn't give you the money or she doesn't give you the money, I'm going to give you the money. So there is a trust between Costco and Visa. DeFi is a proof. As I said, a proof. Why? Because we solved the double spending problem. Next Zepo or Satoshi, in his email, he said, I'm going to create an e-cash system with that can transfer money without double spending. For example, suppose I have a 5 coin. I go to Costco and I buy stuff with 5 coins. You can see I have 5. But if I go on the same time, I go to Walmart and I buy with 5 coins, Walmart cannot see that I just spent the 5 coins in Costco. Now with the DeFi, we have with the double spending solving the problem. Now we have a built-in proof. So when I say, here, I have 5 coins, give me a service, I will give you the 5, and I will transfer 5. That means I have not done it twice, double spending. So these are the system. Decentralized finance removes the intermediaries and allows people, businesses, and merchants to manage financial transaction via peer-to-peer technology. Peer-to-peer transactions are made on the top of the blockchain platform, and the main goals are to decrease transaction times and enhancing access to financial services. We're talking about $100 billion every year, 10 years, $1 trillion of revenue for Visa, MasterCard, PayPal, all of these every year, about $25 billion. At least in the United States. I'm not talking about Europe, China, or Russia, or other countries. We have Africa also, we have a Middle East, and so on, so on and on. Final thought is, some attraction of the DeFi removes fees and commission. It's a digital wallet. Remove the intermediate and allow people to do peer-to-peer transaction. The classic questions are here. Again, I like short and sweet. All of this question can be on a page or in 2 pages. 1 line, 2 lines will do it for me. If you want to invest more time, read about it and write, I'm happy to get that. But obviously, all of these are in my book, but you can, from this lecture, you can also answer this question. Thank you so much, and see you next week.